Welcome to the conversation. It's great to have you on the program today.
Good morning.
Let's begin with the breaking news out of France. France's government has collapsed, as I'm sure you've seen. Is this another political crisis of President Macron's own making?
Okay, I'm here to speak about energy. French politics it's a democracy. We have to respect the voice of the people, and then I think the president will take the right decision for the country.
Walk me through your message to President Macron, though, because obviously this is a concern for big business on the ground. This is the 5th Prime Minister in less than 2 years. Quite a dismal record, I'm sure you'd agree.
Yeah, business is looking for stability. We are investing, so we like stability. It's not very stable. Having said that, for TotalEnergies, we have a global company. Most of our investments are not in France, they are outside of France. We invest heavily in LNG in the US, for example, in the Middle East, in Africa. So I would say, yes, of course, it's our home country. We have 30,000 people working there, so it's important. But to be honest, for the global course of the business of TotalEnergies, it's not so important.
So let's talk about what's happening on the ground here at Gastech then, because what's most interesting for me is the fact that we have two very senior US officials on the ground here on behalf of President Trump. They have called on Europe to ditch Russian oil and gas and buy more American energy. What's your reaction, Patrick, to Washington's energy dominance push here on the ground in Europe?
Everything has changed in the last 15 years with the shale revolution. The US before were a net importer, of oil and of gas. Today they become a net exporter of oil and gas, which is exactly the opposite of Europe. Europe is clearly, in terms of fossil fuel, oil and gas, is an importer. So an exporting country, an importing country. There is a match between both of them, which is by LNG. It's true that Europe has an energy policy which is more to try themselves to be more independent with nuclear, with renewables. The link to all that is gas. Gas, that's why I'm happy to be here in Milan or LNG. And LNG, the US are, yes, investing heavily in LNG, and we are the largest LNG exporter from the US company. Not many people know, but TotalEnergies is the largest exporter today, and we'll maintain that position. We intend to invest. We are investing heavily in the US. And yes, we are also the largest importer in Europe because we have the largest regas capacity. So we are the company which makes the bridge between the US and Europe. So in this debate about the tariff, etc., yes, energy is obviously, naturally, a business which will grow between the US and Europe, and TotalEnergies is very happy to be one of the main players of that business.
And you'll be meeting with the US Energy Secretary Chris Wright today?
I will meet with the Secretary of Interior today because both are together. We know we are also investing in the US, in LNG, in electricity, in gas plants, in renewables, so I'll continue to invest. So yes, of course, for a company like TotalEnergies, again, the US is plenty of energy. Oil, we invest in the Gulf of Mexico with Chevron, and we continue to explore. Gas, LNG, we will announce the new train for Rio Grande, train 4. The FID will be announced today, so it's good news. Investing against an investment of $7 billion, additional one. And also electricity. In the US it's a lot about AI, data centers. There is a lack of electricity. Total is investing heavily in gas plants and renewables for the benefit of the tech companies.
It's an excellent point, and I'm glad you raised it, because the call from the Americans, particularly towards the European, is to buy more US energy. And all of this is also tied together with this potential EU-US trade deal as well. Do you think that more US LNG into the continent is good or bad for TotalEnergies? What will rising LNG supply mean for you?
Rising LNG, we are the third largest player in LNG. Today we represent 40 million tons of LNG, 10% of the world market. We will grow to 60 million tons. The market will grow from 400 to 600. So it's a good business. Again, let's be clear, Europe and the US, Europe should not go from an over-reliance on the Russian gas to an over-reliance on the US energy. So this is a debate. For Europe, which is importing, they need to diversify the source. And a company like TotalEnergies will produce in the US, and again, we'll continue to invest, but also in Qatar, but also tomorrow in Mozambique, in 13 countries. So we are able to diversify the supply. And that's, in fact, what we are looking for. So yes, it's good for both. And it's good because, again, why do we need gas in Europe? We need gas because we want to make electricity, and gas to power is the right complement to renewables. Renewables are intermittent. We need some base load. The gas can deliver it, nuclear as well.
As you and I have spoken about before in Abu Dhabi and elsewhere around the world, sir, it's pretty clear that President Trump wants to crack down on the funding of Putin's war machine. We've seen these new US tariffs on India, for example, for purchasing Russian crude oil. Europe has been called out for what's been described as a hypocrisy here, because at the same time, Russian gas still makes up about 14% of EU imports. That's up from last year, not down, even after all of these pledges inside Europe to cut Moscow out. So do you think Europe has failed to get serious here about ending its reliance on Russia?
No, I think Europe is serious. Europe, on the oil part, on the petroleum products, most of the countries have stopped. There are 2 countries still importing oil. I think there is a debate. On the gas, let's be clear, it's mainly LNG, which is coming from Russia. Why? Because, you know, in 22, when suddenly Russia stopped bringing gas to Europe from the pipe gas, Europe has faced a huge demand for LNG. The price rocketed to $300 per barrel because there is no new capacity since 22 which have been really built. Capacities will begin to peak from mid-26, mid-26, even in the US or in Qatar. So for Europe today, there is no alternative. We import around 15, 20 million tons of Russian LNG. Europe has recently decided that they will stop by end 27 from 28. Why? Because then we are able, company like us, we will be able to replace these Russian LNG by US LNG, by Qatar LNG, with no impact on the gas. Because today the priority for Europe is security of supply, reliability, and its affordability. You know, the shock for the European industry has been huge on energy because we lost the Russian gas. So, of course, the governments are trying to navigate. So, I think the position of Europe is right. On the gas, LNG, again, we need to have Russian LNG until end of 27. Then we can exit from that because we can source it from other places without impact on the price.
Of course, still a lot of question marks, though, over whether or not the EU-US trade deal, which will require Europe to buy some $750 billion worth of American energy by 2028, and Europe's goal of weaning itself off Russian supply by 2028 is even realistic, though. Would you agree?
I mean, all that is up to the European political leaders. I was not part of the trade discussion. What I know is that we are developing the business. We grow. That Europe will need more LNG, for sure. And again, you know, Germany, for example, is thinking to build 10, 20 gigawatts of gas-fired power plants. We'll need more gas. Fundamentally, the fundamental of all the policy in Europe is to exit from coal and to replace the coal by gas, renewables, nuclear. So it's good for the business. Then the figures, it's not the global figures, let them that to the European political leaders and their counterparts in the US.
One more question on this. Of course, we've also just seen Trump's energy secretary calling the EU's net zero agenda, and I quote here, a colossal train wreck. Do you agree?
No, I think, again, I just answered, it's different. You know, by the way, today, when you listen to the narrative of Europe on energy, it's security of supply, it's affordability, sustainability. Again, Europe is importing fossil fuels. So for us, our dependency is a problem in Europe. So, of course, there is a natural trend, like in China, to go to other energy that we can more control. Renewables, nuclear are part of it. So I think it's difficult. And it happens that if we are going more to renewables in nuclear, it will be more sustainable, it will be more secure. So all that is linked. The question is the affordability, which we need to demonstrate that we have at the end an efficient and affordable energy for the industry and for the people of Europe. So I think it's not a matter of ideology. It's a matter to be pragmatic on energy. And honestly, it's true that in Europe the narrative was very dominated by climate 5 years ago. Today, since the Russian war, listen to the European leaders, security of supply, affordability. Chancellor Merz is very clear on that.
Quick question on oil for you as well. Oil now trading at around $65 a barrel. We've spoken before about how there are concerns about abundant supply now that we see OPEC unwinding these production cuts. How worried are you about a glut in Q4? How low could prices go, and what does it mean for Total?
You know, honestly, I think a company like Total, we are designed to fit with the cycles. We know there is cycles. It's not in oil remaining at $70, $80 as the ideal range. It does not happen. So it's true that we have very good years, 3 years at $80, so more investments coming, in particular in non-OPEC countries, because this supply is coming from Guyana, from Brazil, from the US shale. If the price go down, the investments will go down, and then OPEC will regain control of the market. So I think Honestly, I'm not surprised. I know that it could soften. By the way, the market did not react so sharply if you observe it, because you have put more oil coming from these non-OPEC countries. OPEC has unwound this 2.1 million barrels of oil per day. It's still 65, 70. Why? Because in the meantime, you have this debate about Russian oil and risk of sanction, or India, etc. So I think there are different elements. Honestly, Total, the break-even of Total is very low. It's $30. The dividend is protected at 50. No cut of dividend for 40 years, even during COVID. So I'm fine. The company is really fit and resilient in front of it, if in case of lower cycle.